You're welcome to this CISA online training. We want to look at auditor planning. IS audit planning is very, very important for any auditor project because you need to have a time with your team to lay out the action plan before you go to the field. And I normally emphasize for IS auditor CISA candidates that audit planning basically is information driven, is information centric, is the information available to you that you are going to use in planning. So most of the thing that activities in the audit planning is centered around gathering information that will be critical to the audit assignment. So audit planning can be approached from two perspectives. Number one, audit planning for the IS audit team, whether internally or external audit firms. Then audit planning for specific engagements. Okay, so we need to look at the audit team itself. Then we need to look at specific audit engagement. All right. So when we're looking at the audit planning for the audit team, all right, you may want to refer to the provision of International Standard on Quality Control 1, ISQC 1. You can download that standard after you've watched this video, and it's very detailed about the running of an internal audit department or an audit firm. Okay, what should be the standard, the norm in an audit firm? Okay, so according to ISQC 1 paragraph 16, it stated the elements of a system of quality control, right? And it stated clearly that the audit firm shall establish and maintain a system of quality control that includes policies and procedures that address each of the following elements. All right, leadership responsibility for quality within the firm. All right, so within another firm, you expect that there should be leadership responsibility, there should be an organogram, there should be a distribution of accountability and responsibilities for quality in the audit firm. And the same goes for the internal audit department. You expect that there should be a structure, there should be policy, all right, for quality within the internal audit department. So whether internal audit or whether external audit, there must be assigned responsibility, accountability for quality control. Okay, so once you are joining the audit team, you should know the do's and don'ts. Okay, you should know what is expected of you in terms of the policies, in terms of the standards, in terms of the procedures that have been approved and have been made available to every member of the audit team. That is very, very important, even before we talk of any audit assignment at all. Then B, all right, relevant ethical requirements. Audit is a very highly regulated field, and a lot is expected of auditors. So you have to be ethical. So we have most of the professions have their ethical codes. ISACA has its own code, which we'll look at in another video. All right. So basically, the ethical requirement has to do with the do's and don'ts. What is allowable, what is not allowable as a system auditor. You are expected to be a professional, all right, handle information with carefulness. You don't divulge information that are confidential. You don't use client information for personal advantage. You need to advocate for professionalism in the area of confidentiality, integrity, availability. Okay, you need to be consistent, to be committed to growth. Uh, competence, skill acquisition. You don't take a job that you are not qualified for, and so on and so forth. So all those ethical requirements, the audit department, internal audit department, the external audit firms have to ensure that every one of their members, all right, every one of their team members is aware of these ethical requirements, and they are, they are ready to comply. Okay, then C, acceptance and continuance of client relationships and specific engagements. Okay, uh, in financial auditing, okay, there are standards that specify, regulations or requirements that must be followed before you accept a client, to form a client relationship. Okay, because there are some client relationships that's going to get the audit firms, and especially, into trouble. Okay, so you have to watch, okay, whether you have those requirements. Number one, you need to look at whether the financial statement is being prepared with an acceptable financial uh, regulatory framework. Okay, for example, in most countries of the world, financial statements are prepared with, using IFRS. Okay, so depending on the national boundary, you want to confirm that the financial statement is prepared within the acceptable framework. You want to also confirm that the directors of the company, they are ready to give you access to all the information you need. Okay, because if you don't have access to information, to people to interview, then how are you going to do the job? Okay, so you want to confirm that that is existing. Then you want to confirm that the directors, they are ready to accept responsibility for the preparation of the financial statement. Now, that is talking about financial audits. So those requirements are there for financial audits, and the same goes also for IS audit also. So there are some ethical guidance, regulatory guidance. Okay, you need to consider, especially things like independence. You want to get an IS audit consulting work. Are you going to be independent? All right. Are you going to be free of any encumbrance in terms of relationship with the client, for you to be able to make uh, uh, for you to be able to make an independent opinion. So ISQC1, discuss, some of those requirements on accepting and continuing with client relationship and specific engagement. Then also human resources. So quality control is also if human resources is also a consideration in quality control. Okay, how is your hiring process as an audit firm, as an internal audit department? How are you getting your people? So you need to look at their background, you need to look at the skills they have, you need to look at their personalities, you need to look at what they are bringing to the table. And of course, training is important. Training and retraining, skilling, reskilling, retooling, all that is very important, so that your people are ready for any audit assignment, uh, as they come. Okay, then E is talking about engagement performance. So uh, you need to have procedures, policies for engagement performance. So considerations like supervision, you don't just, send people to the field. There need to be supervision, there need to be review, peer review, code review, auth review, so all manner of checks to ensure that the job is done according to the expectation of auditing standards. Then the last element of a system of quality control, according to ISQC1, is monitoring. So you need to ensure that there is monitoring of the audit work, okay, and monitoring even of the audit firm. Okay, so you want to monitor the culture, you want to monitor behavior, you want to monitor performance, you want to monitor results. So you need to have key performance indicators for the audit firm, you need to have key performance indicators for the audit team, if it is an internal audit department. So this quality control is very, very important. So for the audit team itself, like I have, as I've mentioned before, the leadership, starting with that A, is very important. Who is the head of the audit team? Okay, so the head of the audit team must take responsibility for recruitment, must take responsibility for training, must take responsibility for skilling up. All right, must take responsibility for resource, acquisition. Okay, acquisition of resources like computer assisted audit tools, software that will be used for engagement. So this will make the IS audit team ready before we now start talking of specific engagement. Now, for specific engagement, as I've said, it is most important that you gather information about the area being audited. So what is the audit objective? What is the scope? So the audit objective is the main reason why we are conducting the audit. All right, the scope, how many branches will be affected, how many applications, how many networks, how many years will be covered by the audit. We need to determine that. We need to review past audit working papers and prior audit reports if there is any, even though the information is not going to be current. Take note of that. In most questions, past questions, in most questions in the ISACA question and answer that I've reviewed, all right, past audit working papers are good, all right, but the fact is that they are giving you stale information. Okay, so you want uh, an evidence that will give you current information. Okay, but that does not mean you will not refer to past audit working paper. So please take note of that. So review mission and vision of the business, review regulatory environment, maybe there are laws, okay, there are standards they've subscribed to. You need to collate those standards and laws. You need to review organizational structure. What is the leadership structure? What is the control structure? What is the what are the reporting lines in the organization? You need to review that. Okay, review the products, the services. Okay, review the product and services in that organization. Review the industry. Okay, is it oil and gas? Is it banking and finance? Is it insurance? Review the industry, so you can look at industry publications and so on. You can review technological infrastructure and applications, because it's very important. So if it is network audit, networks are various, types, and brands. Okay, so is it a LAN? Is it a WAN? Is it a MAN? All right, are they using Cisco products? All right, so you need to be able to familiarize yourself with the technological uh, uh, enterprise architecture. So then you perform risk assessments, very important. So you want to know what are the areas of highest risk in that organization. So the risk assessment is important, so that you can focus, the Pareto rule, 20%, all right, of the effort will produce 80% of the result. So you want to find in that organization, if something will go wrong, where would we know which department, which application, which business process can trigger the worst case scenarios for the organization. So it's also still come by knowledge. All right, so uh, observation, reading industry reports, looking at business processes. Okay, so this will help you to be able to determine the areas of highest risk. Okay, so perform functional walkthrough of the business processes, review the corporate governance system in that organization, review the system of internal controls in that organization. You need that information because later you will do test of controls, which are compliance tests. Okay, review internal policies, procedures, and associated documentations. All right, so all these are very important when you are gathering information in planning for specific engagement. Then you draft the audit budgets. So you now have an idea of what you are going to do, what the tools you are going to use, what is going to cost you. So you draft the audit budget, then you assign personnel. So based on the skills and competence of your team, you now assign personnel to the audit assignment. Then determine software and hardware requirements, okay, which you will need. determine the need for auditors experts. This is also very important because the specific audit engagement may be something that is beyond your department or that is beyond the audit team. Okay, maybe you need a forensic expert or you need a BI expert, business intelligence expert. Okay, so or robotic expert. So something that is novel. You need to get an auditor's expert. So determine that while you are planning. Then address engagement logistics. Okay, where are your teams? Where are they going to eat? Where are they going to lodge? Okay, transportation. You know, so all those engagement logistics you need to consider them because they are also very important in audits. Okay, so as part of the audit planning, I mentioned if the fact that you need to perform risk assessments. Okay, so we need to look at risk-based audit planning. So risk-based audit planning is the deployment of audit resources to areas within the auditee entity that represent the highest risk. I've talked about that. So it requires the understanding of the entity's PESTEL. You know what they call PESTEL in strategic studies. So P is for the political environment. What is the political environment of that organization, of that business entity? All right, because the political environment is very important. It can, you know, trigger a lot of you know, positive or negative trend for the organization. Recently, I was looking at you know, on the internet. I was seeing, you know, Rwanda was trying to develop their what is it called? They are trying to develop their homegrown clothing industry, and that also have, you know, impacts on American economy too, because American economy too was, you know, was a principal contributor in sending cloths to Rwanda. So there is that conflict, which they are still trying to manage right now. So something can happen in one country and it can have an impact on another country. And the same thing, you know, you can have a change of government. So the current government, the former government have been supporting the business. The new government is not ready to support the business, maybe in terms of grants. You know, these are things that can, you know, collapse businesses overnight. Okay, so as auditors, you need to be aware of the political environment of the auditee. You need to be aware of the economic environment of the auditee. So things like inflation, forex, exchange rate fluctuations, interest rate fluctuations, they are very, very important. Some of these trends are, you know, they are not what the business, the auditing entity can actually control. Okay, but you need to be able to be aware of them so that you can respond, okay, to that risk as, you know, as leaders of the business. So even if the leaders of the business are not aware, as auditors, you're supposed to bring them to that knowledge, bring such information to their knowledge about how the economic environment is going to affect them. So social environment is also important. The social environment could be hostile. The social environment could be, you know, aggressive. It could be accommodating. So you need to look at the social environment. You need to look at the technological environment. Technological changes can make the applications in that organization to become obsolete. It can even make their products to become obsolete. Okay, so you need to watch the technological environment. Okay, I remember there was a time, you know, pagers before GSM came to Nigeria. All right, pagers was, you know, was gradually, you know, penetrating the market until suddenly GSM came, and that was the end of that product, the business. So all the businesses that have invested in that product, you know, they lost out. So the technological environment is very, very important for business to monitor. Then environmental factors are also very important because of this issue of climate change, ozone depletion, issue of carbon trading and the rest. So you as a business, the business needs to be aware of the environmental factors that can affect the organization. Then, of course, the last L is legal factors. So contracts, the the business has the capacity to sue and to be sued, you know. So all these are important factors to consider when you are performing an audit. So sometimes there are some contractual obligations can lead to winding up of a business if not managed very, very well. So as IS auditors, sometimes we may want to review contracts to check whether the client is protected. For example, right to audit clause, you know, all those clauses that are very important to preserve the interest of the client. So PESTEL is very important when you are doing risk-based audit planning. Okay, then risk assessment in planning. You know, risk assessment basically is three elements: is risk identification, risk analysis, and risk evaluation. So risk identification, what are the risks in the business? So we need to draw a risk profile. We need to draw a risk profile, develop a risk map, okay, so that we can know the risks that the business is subjected to. Then once we have identified the risk, we can analyze those risks. So we can now determine the impact of the risk, we can determine the frequency of the risk. So we can use all manner of risk analysis methodologies, qualitative analysis. We just rank high, low, medium. So that's just judgmental based on auditors' experience. We can use semi-quantitative analysis where we use a little of quantitative, a little of qualitative. So descriptive ranking, high, low, medium. Then we still use numerical ranking of maybe 5 for serious risk, 4 for high risk, 3 for medium. So combined together, then we have a quantitative analysis, risk analysis, which is purely calculation. So you use loss of probability, value of assets times probability of the risk occurring will give you risk amount. Or we can use a single loss expectancy calculations to determine how much loss is the organization subjected to in a year. All right, that is a single loss expectancy. So with risk analysis, we can put a figure or we can put a ranking to the impact of the risk. Then risk evaluation based on the residual risk of the organization, we cannot decide whether we can accept the risk or we can treat the risk. So based on the threshold, the residual risk threshold in the organization, we cannot look at the risk, evaluate the risk, whether it is within the acceptable level, acceptable range or not. So if it is within acceptable range, we accept it. If it is not, if it is beyond the acceptable range, that means we have to start planning on how to respond, how to treat that risk and bring the risk down to residual level. Okay, so this is what we do in risk assessments. Okay, so we identify the risk, we analyze the risk, then we evaluate the risk. Okay, then as I said, you need understanding of the controls in the auditing environment. That's why, because we need to do that, because later, like I said, you will do test of control. So test of controls, fine. Controls are available, controls are implemented. You want to test whether those controls are working. So test of controls or compliance test is the test to determine whether controls established by management are working as designed. Okay, then we also have substantive tests, which is the test of balances and transactions. So you want to confirm balances. Okay, the system says bank balance $1 million. Okay, you want to confirm. Okay, so I can do circularization as auditors. I can write the bank after getting permission from the client and confirm. Okay, my client said he has $1 million with you. Can you confirm the balance of the customer with you? All right, so that is circularization. Okay, so we want to confirm balances, we want to confirm transactions. Okay, the statement of financial position, the balance sheet is showing land and buildings. Okay, of worth $500,000. Okay, so I want to see those land, the land and the buildings. I want to see the land and the buildings. I want to confirm they are existing. I want to confirm their valuation. All right, so that is what we mean by substantive test. So we can use analytical reviews. So analytical reviews involve accounting ratios. So I can calculate accounting ratios, liquidity ratios, investment ratios, profitability ratios. So those calculations will give me information on what is happening in that organization. All right, I can do trend analysis. What was the figure last year? What is the figure now? What is the variance between the two when you compare? Then I can ask questions whether the variance, is normal or whether it's the variance is abnormal. Okay, so data comparison. I can compare data over a period or over businesses, over departments. I can compare the data of the clients with the data of the industry. So that will give me ideas on whether the balances are making sense or not. Okay, I can do vouching. I want to see source documents. I want to see the document they use for posting. I want to cite the invoices. I want to cite the invoices. I want to cite the receipts. I want to cite the shipping documents. That is what I mean by vouching. Then inspections, like I mentioned. Okay, you have lands. Okay, you have land worth of so and so. I want to cite the land. Okay, I want to see the land. Okay, you told me that you have machineries, PPE, property, plant and equipment. I want to cite those equipment myself. Okay, so that is what we mean by inspection. Okay, so this is basically what we mean by audit planning. So audit planning, basically, like we said, it has to do with planning for the team and planning for the for specific engagements. Okay, so as we round up, I want us to look at this review question. Which of the following is most important consideration for effective audit planning for specific engagements? A, leadership style of the auditee entity. B, knowledge of the auditee entity. C, use of cross-functional teams. D, deployment of project management tools. So out of all these four, what do you think is most important for the success of a particular audit engagement? Okay, the answer basically is B. Okay, leadership style of the auditee entity. Okay, as auditors, you are not in control of that, even though you are going to gather the information about that when you are planning for your audit. Use of cross-functional teams is very important in audit planning. Okay, but what is most important is actually your knowledge of the auditee entity. Please take note of that. The knowledge you have at the planning stage will determine the success or failure of the audit assignment.